Good afternoon. We are at DNCA in Paris. Could you say something about yourself and about your funds?
Good afternoon. Very nice to meet you. I'm Alexis Albert. We are today based in Paris at DNCA, and I'm going to talk about the fund that we run, which is called DNCA Invest Evolutif. It's a flexible fund with equities and bonds. It's what we call a patrimonial fund that is destined to retail investors and institutional investors. And so we have a mix of bonds and equities within the funds.
Okay, and in which regions do you invest?
So we can invest globally, especially when it comes to equities. We focus more on Europe when it comes to bonds.
Okay, and why do you focus more on bonds in Europe?
So for the bonds, we think it's better to focus on Europe because of also the way we look at it in terms of duration, in terms of maturity. It just makes it easier for us in terms of the corporates and the govies, and also in terms of US dollars exposure. We think that we have enough US dollars exposure with the equities.
Okay, and how is your mix or your current mix of the fixed income portfolio?
Today, the fund is 70% equities and 30% bonds.
But in the bond, how is it distributed over government bonds, high yield, or other bonds?
So within the bonds, we are mainly with government bonds. We have a very, very limited amount of high yields. 80% is investment grade, 20% is high yields. We limit the exposure of the funds to high yields because we think that we can already get that kind of exposures with the equities. So we have a very limited exposure to high yields, and we want to keep it that way. 20%, when I say 20%, it's not 20% of the funds, it's 20% of the bonds that is high yields.
Okay, and about equities, how many positions do you on average have in your portfolio?
So equities, like I said, 70% of the fund is exposed to equities, and we have a global exposure. The exposure is mainly Europe and US, and it's pretty well balanced between Europe and US. We have about 50% of the fund that is exposed to United States. We have about 50 positions, but the bulk of the positions is the 40 major positions.
And how is your analysis, more or less, is more top-down or bottom-up?
So the way we run the portfolio, it's a mix of top-down and bottom-up. The top-down helps us to define the exposure between equities and bonds. And then when we have defined the exposure of equities and bonds, which is, like I said, the top-down approach, then we come to a bottom-up. Bottom-up to pick the equities that we are going to have in the fund.
Okay. Could you say something about the historical performances?
Yes, absolutely. I mean, we've had a couple of good years. 2023, the fund was up mid-teens. 2024, mid-teens as well. And we also had a good years in 2020 during the COVID. 2022 was a bit more muted, but the last 2 years have been extremely good, especially thanks to the exposure of the fund to North America.
Okay, and what are currently your biggest positions?
So our biggest positions, if I'm thinking about the top 10 of the positions within the funds, we have, I can think about, there's a good mix between, again, Europe and North America. So I can think about Saint-Gobain, which we think is very well positioned for the reduction of CO2 emission. I can think about companies, so that is obviously based in France. I can also think about Deere, which is a leading agricultural company in North America. I can think about companies such as Meta, which is a good position for us as well. Airbus in Europe. So those are in the top 5 of the positions of DNCA Invest Evolutif.
And could you say something about your position between value and growth at DNCA?
So DNCA has been long-term famous for being a value house. At DNCA Invest Evolutif, we think it's very important to be balanced between value and growth. We've seen in 2022, but as well in 2023, and again in 2024, that some quarters are going to be value, some quarters are going to be growth. It's even on a monthly basis. So we think for investors, it's very important to be balanced between those two styles. So at the end of the year, we are 50% value, 50% growth. And this is the goal. Our goal, obviously, this is not going to be monitored on a daily basis or on a weekly basis, but on a yearly basis, we think it's very important to be balanced between those two styles.
Okay, and what's your definition of a value stock?
So the value stock is, for us, this is a company that is that has a discount versus the market in terms of valuation, but, and this is very important, but for us that is also a good company in terms of margin versus peers, in terms of the way the company has been managed. So we're not going to go for what I would call bottom fishing. Value for us is a company that is at a discount in the market, but is also a quality company.
But can it also happen that a stock is both a value stock and both a growth stock?
So our goal is to buy stocks that are value and that start to enter into the category of growth stocks. We've seen that in the past with a company such as Schneider in France. It used to be value-ish, not fully value, but pretty much trading in line with the valuation of the market. Now the company pays itself with a premium to the market. So that's our goal. Our goal is to find companies that are in line with the market or below the valuation of the market, and hopefully that will end up being paid with a premium to the market.
And what are your expectations for the coming years? Do you expect to keep the same strategy?
So we remain very constructive for 2025, which is why we have a 70% exposure to equities. We think that Europe might have a tough start to the year. I mean, when I say tough, we know we have the geopolitical turbulences. We have election coming in Germany. We still need to vote the budget in France. So the beginning of 2025 might still be within those turbulences. At the same time, North America, economic growth is still very dynamic. The valuation also is probably priced in, but at the same time, we think that we are going probably to have an acceleration, at least from the bottom in Europe as we go towards the end of 2025. Maybe in North America, that might be, the confirmation of that, I would say, slow landing, of that landing that we've been talking about for many years. But overall, so we think North America stays well-oriented, and we think that maybe Europe, we start to rebound from the bottom.
Okay, thanks for the interview.
Thank you very much.